the actual output in that quarter was weaker than the consensus had anticipated. But our longstanding view has been that what really needs to happen for the Japanese economy's momentum to continue in a sustainable fashion is for the driver of growth to shift away from exports to domestic demand. Obviously, we haven't seen a full-blown recovery yet, but given the fact that oil has come down, given the fact the yen remains on the weakish side, we do expect that domestic demand, especially as we get into the spring wage negotiation season coming up in the next couple of months, that wages will start to turn positive. That will lift consumption, which is more than half of GDP, and that will start to build on what we expect to be a more sustainable economic recovery here.
It seems that large corporations are gunning for a higher increase during this wage negotiation. But what about this SMEs? How much longer do you think it's going to take for that to trickle down into some of these smaller and medium-sized enterprises?
So naturally, there's always going to be a time lag, isn't there, between the large and the small companies whenever you are coming out of a prolonged period of deflation, a prolonged period where wages have only gone down. So I'm pretty positive because over time, as you see the tightness in Japan's job market, which is much tighter than you see elsewhere, particularly in the United States and Europe, that tightness in the job market is naturally going to lift, especially service sector, non-manufacturing industry, which is again dominated by the SME sector in Japan, to overall lift the wage trend. It will take a little bit of time, but I'm pretty confident that will come through.
All right, Kathy. So, I mean, fingers crossed, and we hope so. Theoretically, it should work, but we're still waiting. But I want to ask you this. I'm just wondering whether or not corporates are taking the view that, look, Abe and the government, you give us this corporate tax cut that we've been wanting and would, we'd love. And then we'll start raising wages. Is that still the quid pro quo, do you think?
I think it is part of the quid pro quo. Remember, it's not just the lower corporate tax rate that companies are going to enjoy this coming fiscal year, but also the fact that the overall operating environment is much friendlier. The combination of the weaker yen combined with domestic inflation. So a lot of domestic-oriented companies are seeing top-line growth turn positive for the first time in many years. So I think all of that all in is enough for the government to argue, look, corporates in Japan, you're sitting A, on a ton of cash, B, we need you to contribute to economic growth by sharing some of that wealth with the rest of society. And I think that's going to be 2015's story.
Kathy, given what we've seen in terms of these GDP numbers, which are, of course, backward-looking, why do you think on the earnings front companies have been continuing to surprise on the upside?
I think it's just a matter of, very, very typical post, the bubble bursting in Japan is this attitude of Japanese companies that don't be overly confident because you just don't know what's around the corner. You may get hit by another sharp appreciation of the currency. You may get hit by some kind of financial system crisis. You might get hit by something blowing up in Europe. You never know. And I think there's this utter lack of confidence that keeps companies keeping their guidance very, very conservative. But as you rightfully point out, Japanese companies have surprised on the upside pretty consistently for the past several quarters. And if you look around the world, Japan is the only market where you're seeing positive earnings revision momentum among consensus. So again, the market has been, I think, ignored by many foreign investors. And I think the GDP combined with the earnings numbers, the fundamentals turning around, will gradually get some foreign investors taking another look.